Welcome back to the market update. Today is Friday, January 30th, 2026, and the headline everyone is talking about is the massive volatility in the precious metals market. After a historic record-breaking rally that saw silver outperform almost every other asset class this month, gravity has finally taken hold. Today, we are witnessing a brutal sell-off. Silver prices in the international market have crashed by nearly 7% in a single trading session. Just yesterday, we were looking at all-time highs, but today, spot silver has plunged to around $107 to $110 per ounce. On the domestic front in India, the MCX has seen a sharp correction, with prices dropping by over 34,000 rupees per kilogram, falling below the crucial 4 lakh rupees mark to trade near 3,65,000 rupees. If you are a trader, today is a day of extreme caution. 0.45 to 1.45. Segment 2. Why is it falling? Bearish indicators. So, what triggered this sudden reversal? We are looking at a classic, perfect storm of bearish factors hitting the market all at once. First and foremost, aggressive profit booking. Silver had rallied nearly 50% in January alone. A move that vertical is rarely sustainable without a pullback. Traders who bought in early January are cashing out their massive gains today to lock in profits before the month ends. Second, we have a resurgent US dollar. The dollar index, DXY, rebounded sharply today, rising 0.6% to trade above the 96 level. Remember, commodities like silver are priced in dollars. When the dollar gets stronger, silver becomes more expensive for foreign buyers, leading to a drop in demand. Third, there is nervousness surrounding the Federal Reserve. Markets are reacting to recent comments from the U.S. administration regarding the next Fed chair. Uncertainty about interest rate cuts is causing investors to flee speculative assets like silver and move back into cash. 1.45 to 2.45. Segment 3. The bigger picture. Bullish trends. However, before panic sets in, we must look at the structural fundamental. Despite today's crash, the long-term bullish story for silver remains intact. Why? Because the world is running out of physical silver. We are entering our 5th consecutive year of a supply deficit. The industrial demand for silver is explosive. We aren't just talking about jewelry anymore. We are talking about the green energy transition. Solar panels, electric vehicles, EVs, and AI-driven data centers all require massive amounts of silver for conductivity. Global solar capacity is forecast to reach record highs in 2026, consuming over 120 million ounces of silver annually. This industrial demand isn't going away just because the price dipped today. In fact, many institutional analysts believe that a price floor is forming. While the paper market is selling off, the physical market remains incredibly tight. 2.45 to 3.30. Segment 4. Technical analysis and what to watch. Technically speaking, where do we go from here? On the charts, we are seeing a shooting star pattern on the weekly time frame, a classic sign of a short-term trend reversal. For the upcoming week, keep your eye on the $100 per ounce psychological level internationally. If silver holds above $100, this dip could be a massive buying opportunity for the next leg up. However, if we break below $100, we could see a deeper correction down to the $90 range. For Indian investors on the MCX, the key support level to watch is 35,000 rupees. As long as prices stay above this zone, the primary trend is still bullish. 3.30 to 4. Segment 5. Conclusion. To wrap up, today, January 30th, is painful for the bulls. We are seeing a healthy, albeit violent, correction after a parabolic rise. The weak hands are being shaken out, but the industrial shortage of silver hasn't changed. Volatile days like this are the price of admission for the silver market. Stay disciplined, watch your leverage, and keep an eye on that US dollar index. That's your update for today. Trade safe.